Okay, let's just double check we are going live. Double check over here that we are going live. There's usually a 13-second delay. So let's just see. All right. Now, one more thing we wanted to check is the the live stream. Okay. So let's get started. I want to welcome everybody to the stream, the inaugural stream, Money in the Music, where we're going to simply go through some events, go through some recent news articles, everything that is related to the wonderful world of blockchain, and specifically focus on stablecoins, as it says in the description, digital assets, regulation, similar industry news, a lot of good stuff going on. So we want to keep everybody entertained, keep everybody informed. So that's really the mission statement for this live stream. Now, the first article that we have today, if we jump over to it, is from Decrypt. So let's just switch our screens real quick and head over to the article. Okay, so let's just minimize this real quick over here. Hopefully that's clear. Let's move it down just a little bit further. Let's see if that works. Okay, so hopefully that, if we do that, that's going to be even better. So let's see if that works. So here's our first article from Decrypt. Of course, it starts off with a rather bad word, he's full of. But JP Morgan's Jamie Dimon, the one and only Jamie Dimon, takes aim at Coinbase CEO Brian Armstrong over the Clarity Act. So this is something that is the article we're going to be discussing now. He's full of it. JP Morgan's Jamie Dimon takes aim at Coinbase CEO over Clarity Act. So it says here that Dimon vowed to fight the passage of the crypto market structure bill until the bitter end. Now let's go through this a little bit more. So in brief, JP Morgan CEO Jamie Dimon went on the offensive against CEO of Coinbase Brian Armstrong on Friday of last week at the end of May. The banking executive said he and others in the banking industry are firmly against the Clarity Act over the issue of stablecoin yield. Now this is really something in the States that's big stuff, big news, very big for a lot of folks. So this is right over the target for cryptodeposit.org because of course this type of legislation is really going to clarify who is going to, or clarity, who is going to be partaking in yield. Yield is really something that's out of there. It's either going to be for a few or for the many. Dimon claimed that Armstrong is the only one fighting for it, meaning the Clarity Act, and spending hundreds of millions doing so. JP Morgan CEO Jamie Dimon did not mince words about his stance on the Clarity Act and Coinbase CEO Brian Armstrong in an interview with Fox Business on Friday. The banking executive said he is not happy with the current version of the Clarity Act, a bill that would regulate most crypto activity in America, and says banks will not accept it that way. Okay, certainly. Dimon further vowed that the banking industry will fight it, and if we lose, we lose. All right, interesting. It will be fought, said Dimon. No one is going to bow down to this guy or that company, he added, without specifically naming Armstrong or Coinbase. After Fox Business anchor Maria Bartiromo asked specifically about Coinbase, Dimon had more to say. He's the only one. He's spending hundreds of millions of dollars in Washington on this thing. He's full of it. Okay, now let's see what's going on here. Dimon's scrutiny of the Clarity Act largely stems from the issue of stablecoin yield, a major sticking point with the banking lobby that has stalled progress on the bill in recent months. At the moment, cryptocurrency platforms are able to offer yield, right? Essentially a form of interest payments on stablecoin holdings as permitted by the Genius Act, signed into law by President Donald Trump in July last year. The Genius Act specifically prohibits stablecoin issuers such as Tether or Circle from offering yields to clients, but allows for third parties such as Coinbase or other exchanges to do so instead. Okay, good to know. That is the status quo of the law for the Genius Act. Banks have fought to include language in the Clarity Act to close that loophole, while crypto industry giants like Coinbase have sought to ensure platforms can continue offering yield tied to stablecoins. The debate has helped draw out the Clarity Act's potential passage by more than 4 months, with Coinbase at one point withdrawing its support for the bill prior to the inclusion of stablecoin reward compromise language. Just 2 months ago, Dimon slammed the demands on stablecoin yield, noting that the public will pay. Once more on Friday, he added that it would eventually blow up on its own. If you want to be a bank, become a bank, he said in March. Then you can do whatever you want under bank law. The contentious bill has seen plenty of back and forth over the last few months, but passed a key Senate Banking Committee vote earlier this month. It will now move to the Senate floor for a potential final approval. Despite the back and forth, President Trump has remained adamant getting the bill passed, posting earlier this week that he aims to codify a future-proof digital asset market structure. As it stands, predictors on Polymarket give the bill around a 59% chance of being signed into law by the end of 2026. Okay, there you go. According to predictors on Polymarket, almost 60% chance of being signed into law by the end of calendar year 2026. Let's move on to our next article. As you guys may know, in our description underneath this video, article number 2 is also from Decrypt. Okay, so let's head over there now and see what's going on. So what does this article note? New York Stock Exchange parent company isn't freaked out by Hyperliquid. It's learning from the crypto Perps giant. So let's go through this article and see what's going on. So of course, you know, the parent company for NYSE is the Intercontinental Exchange. CEO Jeffrey Sprecher said his company and Hyperliquid are learning from each other as crypto Perps gain ground. So in brief, ICE and Hyperliquid are learning from each other's models and operations, ICE CEO Jeffrey Sprecher said. Sprecher said SpaceX Perps may test whether crypto prices matter before IPOs. The CFTC on Friday approved Bitcoin perpetual futures on prediction market platform Kalshi. Okay. Hyperliquid has become a wake-up call for traditional markets, prompting discussions with the crypto venue, studying its 24/7 model and asking regulators whether U.S. exchanges can offer similar perpetual futures under clear rules. That's according to Jeffrey Sprecher, founder, chairman, and CEO of Intercontinental Exchange, who spoke at a fireside chat during Bernstein's 42nd Annual Strategic Decisions Conference on Wednesday. We're not freaked out about it, Sprecher said, referring to Hyperliquid. We're actually talking to these people and learning about it. They're learning what we're doing. We're helping them understand our world. They're helping us understand their world. Hyperliquid is a crypto platform where traders can bet on price moves around the clock outside of the normal Wall Street hours, outside of the normal Wall Street system. Perpetual futures, often called Perps for short, are contracts that let traders bet on where a price is headed without an expiry date. Okay, here we go. For Sprecher, The issue is whether regulated exchanges can offer products comparable to the perpetual futures already trading on crypto platforms. ICE, the Intercontinental Exchange, right, as you see up here, Intercontinental Exchange, CEO Jeffrey Sprecher, right? So the parent company of NYSE, which owns the New York Stock Exchange, has asked regulators why traditional venues are restricted from offering similar products, he said. But what we're saying to the regulators is, can we do that? Sprecher said, like, what are you prohibiting us from doing? Why are you prohibiting us from doing this when it's already happening? And can't we have a level playing field? Question mark. Okay, so just 2 days later, we're already seeing the gap close. On Friday, the CFTC issued an order allowing Kalshi to offer Bitcoin perpetual futures, a move that appears to bring part of the market Sprecher described closer to regulated U.S. venues. Coinbase, a publicly traded U.S. crypto exchange, also announced Friday that it can now connect U.S. institutional clients to global crypto options and perpetual futures liquidity through its CFTC-regulated futures business. On Wednesday, Sprecher pointed to SpaceX, Elon Musk's rocket and satellite company, as a near-term test of whether prices formed on crypto trading venues can matter before a company lists publicly. Market participants and regulators would be watching whether a derivative price linked to SpaceX formed before the IPO proves irrelevant or becomes a reference point for the listing, he added. Okay, so that's interesting. Market participants and regulators would be watching whether a derivative price linked to SpaceX formed before the IPO proves irrelevant or becomes a reference point for the listing. Okay, that's an interesting perspective. Traders are already using perpetual futures to bet on SpaceX's expected listing price months before a potential IPO, with those contracts averaging nearly $18 million in daily volume over 2 weeks, according to Bloomberg. Interest in SpaceX has also grown alongside reports that Musk has discussed folding the rocket firm together with Tesla, a move that could place more than $2.2 billion worth of Bitcoin under one corporate roof. A changing game. All right, so such discussions suggest price discovery for companies such as SpaceX is increasingly happening on crypto rails before a bank syndicate files their IPO paperwork. Alton Miller, CEO of private markets infrastructure firm Hecto Finance, told Decrypt. Perpetuals are not the only tool in that shift, but they are an important signal of where marginal views on value are being expressed and hedged in real time, Miller said. Regulators should focus on giving that activity a clear, technology-neutral home onshore so it can improve transparency in notoriously opaque private markets, he added. All right, so ICE's talks with Hyperliquid show Wall Street is taking on-chain derivatives more seriously. Fernando Lillo, marketing director at crypto trading platform ZoomX, told Decrypt. Access to companies such as SpaceX before they go public has long been a venture capitalist and institutional elites game, Lillo said. Traditional firms once treated crypto derivatives platforms as unregulated shadow markets, he said, but now Hyperliquid points to an on-chain architecture validation and retail-driven pre-IPO markets or marketplace. So Sprecher is making a pragmatic case to regulators, Lillo said. If the demand exists and the technology works, let us host it safely in a regulated environment before we lose the market entirely to offshore entities. Okay, good point. That demand is already showing up on crypto platforms. For now, the door to Bitcoin perpetual futures is open, but products outside it still need to undergo a case-by-case review process, the CFTC said. All right, so this is article number 2 for today's news summary. Quite interesting. And to remain objective here, this article, the reason that we selected it for today is just to point out the nexus between how you price an IPO, okay, and the legacy infrastructure that we can see as outside observers. That, as noted by this gentleman in the article, that this is either something that's fully offshore or it's unregulated. So in order to bring that activity and that pricing mechanism back onshore and within regulation, you could say that the CEO, Jeffrey Sprecher, the CEO of the parent company of the New York Stock Exchange, the Intercontinental Exchange, which is also listed, has a good point. All right, let's move on to article number 3. So as we see in the description of today's video, it's also a Decrypt article. It's the MasterCard. All right, so let's go to the next tab here and go to article number 3 that we pulled up. So this is from the 27th of May. And this, my friends, for all of you watching this presently or in the future, is also related to cryptodeposit.org, because one of our operations that is fully licensed, and one of the operations that we're trying to build out under a different branded umbrella deals with cards. So this is something near and dear to our hearts. So MasterCard secures a New York BIT license and push for stablecoins tokenized deposits. So MasterCard has secured a highly coveted BIT license in New York, anchoring its compliance-first strategy for stablecoins on Wall Street. So again, this was back on the 27th of May, so middle of last week. So here you go. In brief, secured highly coveted New York DFS BIT license, anchoring its compliance-first strategy on Wall Street. The payments giant is aggressively funding its digital asset footprint, which of course makes sense, underscored by its efforts to acquire crypto infrastructure firm BVNK. Yes, big time. I believe that's European based. Now, MasterCard is actively defending its market dominance by integrating stablecoins into traditional banking via firms like SoFi. And this is also an interesting point, because if people have watched the SoFi market price these last few years, the stock price has been up and down and up and down. So these kind of partnerships, it's interesting because this is sort of lending, right? And this, or buy now, pay later. So SoFi and MasterCard. So MasterCard said it has secured a BIT license from the New York Department of Financial Services on Wednesday, planting a flag on Wall Street while welcoming rigid standards enforced under one of crypto's strictest U.S. licensing frameworks. The move highlights MasterCard's focus on regulatory compliance in a sector gaining steam among financial incumbents. The company described the measure in a blog post as part of its long-term strategy for supporting stablecoins and tokenized deposits. Here we go. So clear regulatory frameworks play an important role in building trust and confidence. Well, for sure. MasterCard Chief Product Officer Jorn Lambert said in a statement, "This approval underscores our focus on aligning innovation with regulatory expectations." Okay. MasterCard noted that the NYDFS, again, NYDFS, New York Department of Financial Services, requires crypto companies to comply with rules that span consumer protection, cybersecurity, financial integrity, and operational resilience. Okay, that's 4 checkboxes. Established in 2015, the framework has inspired rules since adopted by other states. Okay, so it seems that New York is the first state to have such a rigorous high threshold, because of maybe perhaps also Wall Street's based in New York. All right, although the regulators' rules were crafted with crypto native firms in mind, MasterCard's efforts mark a careful walk along the path of innovation. The pace hastened last year among many firms following the passage of the Genius Act, which was signed into law June-July of 2025, which enshrined stablecoins into federal law. That was pushed by Donald Trump, among others. Okay, so obtaining a BIT license in New York is famously difficult and expensive, but the company that processes around $9.5 trillion in annual payments has already allocated significant resources towards stablecoins and the technology more broadly. And some of that, if you are familiar with MasterCard Ventures, you can see in their recent corporate venture capital activity, trying to gobble up and trying to acquire entire teams or startups that are adjacent to this type of blockchain and digital asset industry. So in March, in 2026, a few months ago, MasterCard said that it was set to acquire infrastructure from BVNK for $1.8 billion, not too shabby, eager to pay top dollar for a company that enables businesses across the globe to send, receive, convert, and store stablecoins, right? That was quite a big feather in their cap. Now, as fintechs increasingly leverage stablecoins to modernize payments and treasury operations, MasterCard has actively expanded its network, working to cement decades of dominance by bridging the gap between digital assets and traditional fiat rails. That makes sense. But what is really the business model of MasterCard other than to continue to grow? I think back in 2004, both MasterCard and Visa went public within just a few months of each other. And so working to cement decades of dominance by bridging the gap between digital assets and traditional fiat rails. So if you think about what are debit payments and what are credit card payments, digital assets is really just the next logical step. Okay. Earlier this year, for example, SoFi Technologies partnered with MasterCard, enabling the online-only bank stablecoin to settle across MasterCard's global payments network. Meanwhile, the intermediary has collaborated with crypto natives like MetaMask and MoonPay, allowing customers to spend stablecoins at millions of merchant locations. Okay, so that wraps up the third article for today. The conclusions we can draw from this is that MasterCard is not playing around. If we were to quickly open up another tab and just check finance.yahoo.com, and then let's check out MasterCard real quick. We can check two very quick specs. So if we type in here MasterCard, we got to wait for the page to load, but let's see here. MasterCard. So MA is MasterCard. And okay, so they're currently trading at 482. They're listed on the New York Stock Exchange. What else? I wanted to show you one other thing here. Let me just go back here. All right, we got to zoom out for the camera view. Make that a little bit more easy on the eyes for some of our viewers. Okay, so if you go to the profile tab over here, you can see that they're located, global headquarters is in Purchase, New York, so they are domiciled in the state of New York. All right, you can see all the top folks. Now if we go back again to the summary, okay, summary page, and then we try to go to the all-time history. Let's see. Yeah, they were listed back in 2000 to early 2006. Okay, it seems. But they are up all-time 11,877%. Not too shabby. So adjusted for splits and all that, they were listing around 4. They're currently at 482. Not bad over just over 2 decades, or maybe just under 2 decades. Okay, let's move on to the next article. So this should be article number 4, if I'm not mistaken. I think this is the final article from Decrypt that we took for today's list. Yeah, the Cash App. Okay, so let's go to the Cash App article. Let's click over here. All right, so hopefully you guys can see this article, and the font is not too shabby. Cash App now supports stablecoins, despite Bitcoin maximalist Jack Dorsey's Gatekeeper gripes. All right, so Cash App has begun to, let's just try to zoom out a little bit in case this font is, so hopefully that's a little bit better for all the viewers. Hopefully the font's not too small. Now, Cash App has begun supporting stablecoin transactions on networks including Ethereum and Solana, pushing past its Bitcoin-based roots. So we've got another competitor in the marketplace, and they are very much interested in taking up market share for stablecoin transactions, especially given the fact that they're they call themselves Cash App, but of course they're working in digital assets increasingly. So Cash App introduced fee-free USDC stable coin transactions across Ethereum, Solana, Polygon, and Arbitrum. And it says here, unlike Venmo, Cash App automatically converts incoming stablecoins into standard USD balances. The rollout introduces broader multi-chain utility to Block's payment ecosystem, which has previously focused on Bitcoin. Cash App has begun supporting stablecoin transactions on networks including Ethereum and Solana, a major milestone for the popular payments platform previously dedicated to Bitcoin under maximalist Jack Dorsey, who founded Twitter back in 2006. So in addition to the aforementioned blockchains, Cash App users have the ability to send and receive Circle's USDC. So again, such as CryptoDeposit.org, our organization, and our affiliated companies, getting the ability to mint Circle USDC is a great boon. So not many institutions are able to do that, minting it at scale. So Circle's USDC on Ethereum scaling networks, Polygon, and Arbitrum, there are currently no fees involved in such transfers according to the payments platform's website. So let's clarify that one more time. As we just saw, in addition to the aforementioned blockchains, Cash App users have the ability to send and receive Circles, right, also New York based, on Ethereum scaling networks, Polygon, and Arbitrum, which are both ERC20 or EVM compatible. So it says no fees involved in such transfers. So that's also quite cutting edge, okay? Because of course I think the way that a lot of sort of legacy infrastructure or archaic wallets would work is that of course they're going to get a gas fee and then maybe even a larger spread. So unlike some competitors, stablecoins received by Cash App users are automatically converted into dollars, represented as standard balances. Currently, PayPal's Venmo records users' holdings of its PYUSD stablecoin alongside other digital assets under a crypto tab. So again, PayPal's Venmo records users' holdings of its PYUSD. So PYUSD is listed inside of Venmo alongside other digital assets under the crypto tab. Cash App's website notes that stablecoins aren't available yet for customers in New York, inside the state of New York, and users must verify their identity while being subject to transaction limits. This is also quite key. So as you guys can see on the CryptoDeposit.org website, you can see on one of the tabs, if we quickly go back over here to our website and we go over to, you can see we've got the in review for the KYC. But that's one of the ways you guys could do that. So it's actually on the bottom of the page. If you go to verification, you can just get that verified if you guys wanted to join now or invite your friends. Don't be shy. Now, okay, so going back to the article here, so they must verify identity while being subject to transaction limits. This is an interesting way to phrase this because users should be verified. KYC should probably be universal when it comes to some of the almost any platform that wants to be taken seriously. So the caveats reflect Block's cautious approach to navigating an environment that faces growing competition following the passage of federal legislation for stablecoins last year, right? So that's the Genius Act. So that means that Jack Dorsey's firm Block is being cautious about approaching and navigating an environment that's facing growing competition. So this has a little bit of a domestic tone, meaning inside of the United States, because of course it's a big world out there outside of the US USDT, USDC dominated stablecoin market. But they have to very much, as you see right here at the beginning of this tiny paragraph, Cash App's website, right? So Block's Cash App notes that stablecoins aren't available yet for customers in New York, all right? So just keep that in mind. All right, moving further in this article, under Dorsey, who is among Bitcoin's most visible and outspoken advocates, okay? So Michael Saylor, watch out. You got company. You got competition. Block has poured resources into the development of mining hardware. Okay, that's interesting. Mining hardware for Bitcoin is been around for quite a while, and BitKey, a self-custodial wallet. All right, so that's also a pretty crowded market now. So those moves have aligned with Jack Dorsey's long-standing goal of promoting Bitcoin as everyday money. Okay, well, welcome to the club, my friend. Dorsey critiqued stablecoins earlier this year as shifting from one gatekeeper to another. Dorsey critiqued stablecoins earlier this year as shifting from one gatekeeper to another. Okay, this critique is interesting. While acquiescing that the technology has seen growing demand from customers. Well, of course the technology has seen growing demand from customers. There's all of these market reports that show year over year immense compounded annual growth rate, CAGR, for stablecoins year over year. This is a trend that we have seen been developing for years and years and years at this point. So Jack Dorsey, has long prized Bitcoin as an open protocol for money transmission. So this, as we've noted in some of our videos that we've uploaded recently, specifically the Circle article from a few days back, when you mention that one gatekeeper to another, there's a lot of moving pieces here, because you have large entities that are issuing stablecoins, and then you still have the government and regulation side. Okay, so stablecoins are really only as good as where they will be accepted and where they will live, where they will circulate, etc. So when he says one gatekeeper to another, Bitcoin is also technically a gatekeeper. The infrastructure of Bitcoin itself is a gatekeeper, and all the institutions that are maximalist to Bitcoin are also gatekeepers. So when he mentions that stablecoins are one gatekeeper to another, you have to look in the mirror. Bitcoin is also very much a gatekeeper in and of itself. And it's technically, as the younger generation says, the OG, but it's an OG with a 2008, 2009 type of coding and technology and hardware to boot. Okay. Now, in March 2026, Block-owned payments processor Square flipped a switch that enabled Bitcoin payments by default for U.S. sellers. Enabled Bitcoin payments by default for U.S. sellers. Okay, so previously the model was opt-in, offering instant settlement via Bitcoin's Lightning Network. When the service debuted in November, merchants were granted the ability to automatically convert card sales into Bitcoin as well. Well, that's nice. Now, that month, meaning November of 2025, okay, when the service debuted, Cash App unveiled stablecoin payments, billing the expansion as a way for customers to make fast, low-cost payments regardless of their network of choice. At the time, Block Bitcoin product lead Miles Sutter described stablecoins as a complementary option for our customers, declaring that Cash App will always be Bitcoin first by design. Okay, that's a case study in and of itself. If apps are going to be basically maximalist or very, very committed to a credo or a declaration, so Cash App will always be Bitcoin first, but they're following the market. If you want to follow the market, and you mentioned that, as we know from these statistics, they themselves are noting that in November 2025, merchants that were using Block Square, owned by Block, were granted the ability to automatically convert card sales into Bitcoin as well. And then, of course, a few months later, in March of 2026, a few months ago, enabled Bitcoin payments by default for U.S. sellers. Previously, the model was opt-in. Okay, so they themselves are moving the goalposts here to allow stablecoins and Bitcoin to really be on equal footing. So Block shares change hands around 71.5 on Wednesday, rising nearly 3.5% midday, according to Yahoo Finance. Okay, the company's stock price has rallied nearly 10% year to date. Okay, very good. Over the same period, Bitcoin's prices declined over 14% to 74,800, and as of today, I think the price is around 69,200. Okay, so that was even in the last week. The prices dropped more than 5-6%. As of March 31st, Block held just over 9,000 Bitcoin, worth 675 million USD on its balance sheet for investment purposes. That makes the company the 14th largest publicly traded corporate holder of Bitcoin, according to Bitcoin Treasuries. All right, .net, BitcoinTreasuries.net, as it says here, situated behind the estimated holdings of Trump Media and Technology Group. Situated behind, so they're saying that there may be Trump Media and Technology Group is the 13th largest publicly traded corporate holder of Bitcoin. Okay, maybe we should open this link and see who is in 13th place. Let's see. This is an interesting article to see who is publicly listed and who holds Bitcoin on their balance sheet. So let's have this open up. Let's see where the list is. So it seems public companies. All right, here we go. Here we go. There we go. So 14 was Block and 13 is Trump Media. And of course, we've got Strategy way up here. 21 Capital, Metaplanet, Mara Holdings, Bitcoin Standard Treasury Company, Bullish, Strive, Coinbase Global, Riot Platforms, CleanSpark, Tesla, Hut 8 Mining, and the list goes on further. Alrighty. Gemini Space Station. Alright. Winklevoss. So, whoops. So we've got two. Let me get back to our. Alright, so we are good to go. I misclicked that. Alright, so hopefully you guys can see my screen again. Okay, so let's get to our next article here, which is the article number 5, which is the Decrypt. Okay, so no, article number 5 is Block. Let's go to article number 5, which is Block. So let's go to the next article on our list over here, which is Block. So Singapore charges ex-Hodlnaut CEO over allegedly misleading claims tied to Terra collapse, faces up to 20 years in prison. This one's a pretty heavy article, but we will definitely go through it because it needs to be addressed. So let's just zoom out here on the text so this is a little bit user-friendly for all of our friends. So hopefully that is a better view. And let's jump in. Singapore charges ex-Hodlnaut CEO over allegedly misleading claims tied to Terra collapse, faces up to 20 years in prison. Alright, so Zhu Juntao, the former CEO of Hodlnaut, has been charged with fraud in Singapore over allegedly misleading statements. So authorities allege that Zhu distributed claims stating that the company had not been impacted by the 2022 collapse of Terra USD. Alright. Zhu Juntao, the former CEO of Hodlnaut, a now defunct crypto lending platform, has been charged with fraud in Singapore over allegedly misleading claims about the company's exposure to the collapse of Terra USD, known as UST. Okay. According to a police statement released Tuesday, Zhu was charged in court with 6 offenses for allegedly distributing misleading statements through the company's official channels. Authorities allege that Zhu instigated employees in 2022 to post statements on Telegram and in official emails claiming that Hodlnaut had no direct exposure to UST and had not suffered losses from the token's collapse. These statements allegedly asserted that Hodlnaut did not have direct exposure to UST and or did not suffer losses arising from the crash of UST, the police statement said. Zhu also allegedly posted similar claims on his personal account on X, then known as Twitter, per the statement. Hodlnaut, which once claimed to serve over 30,000 users globally, became defunct in August of 2022 amid a liquidity crisis. An affidavit cited in an earlier exclusive report by The Block showed that the May 22 collapse of UST resulted in losses of roughly $189.7 million for the platform, meaning Hodlnaut. So if convicted, Zhu faces up to 20 years in prison as a fine or both, according to the police statement. Singapore has intensified enforcement efforts against crypto-related crime. Last year, the country arrested and extradited 3 suspects to the U.S. over allegations tied to crypto market. Yes, again, Singapore has intensified enforcement against crypto-related crime. Last year, meaning 2025, the country arrested and extradited 3 suspects to the U.S. over allegations tied to crypto market making firms for allegedly wash trading cryptocurrencies to inflate trading volume and prices. And Singapore is a marketplace that is going to take that very seriously. So I think we're ready to jump to our next article, if you guys don't mind. So let's see what is article number 6, I believe. Let's see, number 6. So yeah, so this is from the Defiant, and this is about Argentina. So let's go over here to the next article on our list, the Defiant. So here we go. Argentine prosecutors arrest 24. There you go. Arrest a bunch. You seize over 8 million in USDT in fake coins. Crypto fraud sweep. So the Buenos Aires Public Prosecutor's Office said it ran 90 simultaneous raids and froze more than 8 million USDT across 3 fraud rings, fake trading apps, WhatsApp hijacks, and a Chinese origin info stealer operation in what it calls the province's largest crypto seizure to date. This is some very interesting stuff here. Okay, so if we continue, Argentina's Buenos Aires Public Prosecutor's Office said it arrested 24 people and seized more than 8 million USDT in a nationwide sweep it called Fake Coins, one of the largest crypto enforcement actions in the province's history. The 90 simultaneous raids executed by the Argentine Federal Police Cybercrime Directorate also yielded nearly 60 million pesos in cash and 80 mobile phones. The prosecutor's office put the dismantled scheme's total economic damage at almost 3 billion pesos, roughly 2.4 million at recent rates across more than 100 separate complaints. The seizure exceeds the more than 2 million in cryptocurrency confiscated in the 2024 Rainbow X operation. The prosecutor's office said making fake coins the largest crypto bust by the province's specialized crypto assets team in recent memory. Coordination ran through the Procuración General Equipo de Asistencia y Coordinación en Materia de Criptoactivos, led by Dr. Rafael García Borda and Dra. Sabrina Lamperti. All right, so the 3 rings the prosecutors took down. The fraud network was not a single operation, but 3 distinct rings, each working a different angle. Wow, this is pretty intense here. The first targeted retail investors with a fake trading application distributed through the Google Play Store, mimicking a legitimate investment platform, self-styled financial advisors. None registered with Argentina's securities regulator, the Comisión Nacional de Valores, CNV, walked victims through escalating transfers. The fact that an application is published in Google's official store does not guarantee its authenticity or the veracity of the financial operations it promises, the Procuración General said in its release. The second ring traced through the Azul Judicial District hijacked victims' WhatsApp accounts to impersonate their contacts and offer black market dollar purchases. Stolen pesos were converted to USDT through Binance's peer-to-peer marketplace and forwarded to Binance Pay accounts registered in Venezuela. A single phone IMEI had received more than 100 WhatsApp and WhatsApp business activation codes. Disposable lines used to recontact victims at scale. The Azul branch alone yielded 4,025 USDT seized from offshore accounts. This is very interesting stuff here. The bulk of the 8 million USDT came from a third ring centered in San Isidro, a Chinese origin organization the prosecutor's office said was building privacy apps laced with info stealer. Okay, that's intense. Malware to harvest passwords and banking credentials. On-chain tracing of the proceeds led to the largest single tranche of the seizure. So what the bus says about Argentina's crypto perimeter. So let's just zoom out here a little bit, if we can do that. So Argentina has been a recurring node in Latin American crypto fraud cases. The country's Generación Zoe Ponzi scheme, whose ringleader was arrested in Venezuela last year with a reported 56 million in Bitcoin, has dragged through the Argentine courts for years. Earlier in 2026, the federal police arrested another suspect in a separate crypto fraud ring the Ministry of Security said had inflicted 1.8 trillion pesos in damage on agribusiness firms. So fake coins lands at a moment when Argentina's formal crypto licensing regime, the CNV's Registry of Proveedores de Servicios de Activos Virtuales, or PSAVs, restructured under General Resolution 1058 in 2025, has been outpaced by the unregistered advisor cottage industry the prosecutor's office describes. None of the people steering victims toward the fake platforms were registered with the CNV. Okay. The Procuración General said the 8 million USDT was frozen with the cooperation of private virtual asset service providers, VASPs. The release did not name them or detail whether Binance, whose peer-to-peer, P2P, and pay rails appear throughout the criminal complaint, was among the cooperating firms. The 24 detainees face charges including aggravated fraud, illicit association, money laundering, and intellectual property violations. The Procuración General has not published the specific charges against each defendant or set a date for the first preliminary hearings. What's next? How the seized 8 million USDT is dispositioned, whether toward victim restitution or provincial coffers, will be the next test of Argentina's still young crypto asset enforcement framework. It's good to see that there is some forward progress on that front. Now, let's go over here to, if we just quickly check over here. All right, so let me double check something over here. We're going to go wrap up these final two articles for today's live stream, our inaugural live stream with Bitcoin Magazine. All right. So as you can see up top here, those are the final two articles we're going to jump into. We will change the font so we make sure everybody can see them pretty good. So let's just do that right now. Ta-da. So hopefully the text is a little bit clearer for everybody. Just making sure that everybody can see that okay. And we'll keep going forward. I hope everybody's having a good day so far, wherever y'all may be. So, Miami IT worker arrested in $1.9 million Bitcoin theft from former boss. A Miami man is facing multiple felony charges after allegedly stealing nearly $2 million in Bitcoin from a former employer, with the theft going unnoticed for years as the funds remained locked in a safe. Wow, 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 wow. A Miami man faces multiple felony charges after police say he stole nearly $2 million worth of Bitcoin from a former employer, a theft that went undetected for years while the cryptocurrency sat locked in a safe. Nahum Reynaldo Castro was arrested Tuesday on charges of grand theft, money laundering, unlawful use of communications device, and offenses against computer users, according to an arrest report obtained by NBC6. The case stretches back to December 2017, when the victim began purchasing Bitcoin as a long-term investment. He bought a hardware wallet to store the digital currency and turned to Castro, a trusted employee since 2013 and an IT specialist, to handle the wallet setup and security, the report said. By the end of January 2018, Castro had secured more than $217,000 worth of Bitcoin on behalf of his employer. The hardware wallet was then locked in a safe inside the victim's home, where it remained untouched for years. That changed in July of 2025. While in the middle of a move, the victim opened the safe and accessed the wallet, only to find it empty. The Bitcoin was gone. At the time of the discovery, the stolen holdings had grown to a value of more than 1.9 million, according to the arrest report. Investigators determined that the theft had taken place in 2020, more than 5 years before the victim realized anything was missing. Castro continued working for the victim until 2024, the report said. The wallet's seed phrase gave away Castro. Central to the investigation was the wallet seed phrase, a master recovery key that grants full access to a cryptocurrency wallet. According to the report, only 2 people had knowledge of that phrase, the victim and Castro. Bank records proved critical in building the case. Deposits into Castro's accounts aligned with withdrawals from the Bitcoin wallet, providing investigators with the financial corroboration needed to connect him to the theft, NBC6 reported. The case highlights a risk in the cryptocurrency space that security experts have long flagged, placing complete trust in a single person during the setup of a digital asset wallet. Because Bitcoin transactions are recorded on a public blockchain but are not reversible, stolen funds are nearly impossible to recover without law enforcement intervention. Castro was booked into jail following his arrest and was set to appear in bond court Wednesday. He has not entered a formal plea in the case. Now, for our final video of the day, let's quickly check over, our final article of the day for today's video. Bitcoin Magazine. Oh yeah, this one's not a good one, but we have to cover it. All right, here we go. Are you ready? Retired couple loses 76,000 life savings to Bitcoin ATM scam, sues Bitcoin Depot in federal court. An Idaho couple is suing Bitcoin Depot after scammers allegedly used its ATMs to siphon 76,000 retirement savings. A class action filed in Idaho accuses the now bankrupt ATM operator of profiting from fraud while leaving vulnerable consumers unprotected. A retired Idaho couple has filed a federal class action lawsuit against Bitcoin Depot Incorporated, alleging the company's ATM network served as a pipeline for scammers who drained the entire retirement savings, 76,000, over 5 consecutive days in August 2025. Karen and Robert Lacey, named plaintiffs in Lacey et al. Versus Bitcoin Depot, say fraudsters posing as Norton customer service representatives and FBI agents convinced them that their accounts were tied to child and illegal gambling investigations. The scammers directed the couple to deposit cash at Bitcoin Depot ATMs between August 9th and August 13th, 2025. To reinforce the deception, the fraudsters caused wireless networks labeled FBI to appear on the Lacey's phones, signals that remained visible for months after the deposits. The 43-page complaint filed May 11, 2026 in U.S. District Court for the District of Idaho charges that Bitcoin Depot processed each transaction without meaningful intervention despite what it calls clear warning signs, first-time users making large cash deposits while on phone calls with unknown parties. That's not good. The lawsuit further alleges that the company charges fees up to 50% per transaction and relies on-screen warning stickers, a safeguard the plaintiffs call demonstrably ineffective. After Karen and Robert's son filed a federal crime complaint, Bitcoin Depot issued two $1,000 refund checks, an amount the lawsuit states did not cover even the fees the company collected. Karen Lacey, who was retired when the fraud occurred, has since returned to the workforce, now working rotating hospital shifts. The complaint cites Bitcoin Depot's own SEC filings, which states its services may be exploited to facilitate illegal activities such as fraud, and that its risk management may not be sufficient. Federal Trade Commission data show Bitcoin ATM fraud losses increased nearly tenfold between 2020 and 2023, with a median victim loss of 10,000. By 2025, the FBI reported Americans lost $333 million to Bitcoin ATM fraud, more than 10,000 victims in a single year. Bitcoin Depot filing for bankruptcy. So the lawsuit arrives as Bitcoin Depot's corporate position collapses. The company filed for voluntary Chapter 11 bankruptcy very recently, back on May 18th, 2026, and shut down its entire network of more than 9,000 ATMs across North America. The company had earlier disclosed a 3.6 million Bitcoin theft from its own wallets in March of 2026 and reported a 49.2% revenue decline in Q1 2026. Wow. Plaintiffs seek a jury trial, injunctive relief, compensatory and punitive damages, restitution of fees paid, and attorney fees. And with that, we are arriving at the conclusion of today's interesting articles that we have been reviewing. And I urge everybody to take a look at cryptodeposit.org. Of course, today's video is brought to you by us at cryptodeposit.org. So we would love to have you guys visit the website, click around the main page. Of course, come back to the YouTube channel if you want to see the episodes, the tutorials, the videos. Cryptodeposit.org is focused on white label solutions as well. So I would recommend those who are dealing with fixed income or institutional to reach out to us and get to know cryptodeposit.org. And with that being said, I think we will wrap up today's live stream right here, right now, and wish everybody a wonderful rest of your day, wonderful rest of your week if you are just getting your work week started on this Tuesday, and wishing you all a very, very good work week. We will be back very soon with another live stream, but be sure to like, subscribe, share. Please share more than anything our YouTube channel with those that you know that are involved in the industry, specifically with institutional and fixed income. That's really our sweet spot. So on behalf of cryptodeposit.org, signing off for today's live stream, and see you on another broadcast or video soon. Thanks again. Have a good day, everybody.